Seth R. Freeman, who's the Managing Director at B. Riley Advisory Services, GlassRatner, and he'll be joining us today. Good morning, Seth.
Good morning.
Yes. Up first, I'll, just start with the MSCI rejig in place. India's weightage has gone higher while China's weightage has gone lower. What are your views on these two markets specifically?
Well, frankly, I've been predicting this for years, and this is a fantastic outcome of the ongoing growth of the Indian economy overall this time, and it also reflects the interest of global investors.
And in terms of, the latest US job data, which did cause, volatility in the market, and what are your views on the indications that the US economy could slide into recession?
There's a lot of stress among the consumer part of our economy. We're seeing quite a few Chapter 11 cases, and many of them reflect consumer-oriented businesses. And credit card usage balances are at an all-time high. But that being said, the economy appears to be in generally good shape. We have to remember that the one of the Fed's objectives was to slow down the economy. And one way that happens is by slightly increasing unemployment.
With terms of, the latest US inflation data today, what are your expectations and how it could impact the, rate trajectory going forward?
I still believe the Fed is just going to go slow, and that we're really going to be looking at Q4 before we really see any impacts.
Q4 till we see any impact. And I also wanted to get your view on, if the dollar does weaken, how would it impact developed as well as emerging markets?
Well, it would be, if the dollar weakens, it's possible we're going to see more interest in other markets, but at the same time, it could increase. We still import a lot, and it could really increase costs here in the United States.
Okay. And, Brent crude prices have also risen almost 8% year to date. There, geopolitical tension still persists. We saw Brent jump, just over 3% yesterday. What kind of implications does this have on markets?
Well, these kinds of price increases affect the entire economy, and oil is priced in dollars. So it puts some additional pressure there. The reality is that, and this is something, that I think India has been lucky to avoid quite a lot of political fallout. There's still a lot of cheap Russian oil being sold, and India is a primary customer of that. And I do see that there's some mid to long-term risk in the level of oil purchased by India from Russia.
And, I want to end with our top story today, which is the MSCI rejig. You said that, you predicted this for a long time coming. So in terms of emerging markets, especially India, where do you see, flows coming in or flows coming out from?
Well, I've continued to be very optimistic about India now for nearly 2 decades. And so I see this trend to continue. And there are many reasons why, besides the domestic growth in India, that's really, driving most of this. There's still a lot of reasons why foreign investors should be looking in India versus exposure to China.
Yes. Well, thank you, Seth, so much for joining us this morning.
Thank you.
Yes.